This is the Royal Financial Investment Group. As always, this is your host, Prince Dice, coming to you guys with another great video. Today's topic is going to be earnings and what's the big deal. So, as always, before I get into the video, don't forget to like, subscribe, comment, and share. If you got any questions, leave some below. But I don't have a lot of time, so I definitely know you guys don't have a lot of time. So let's jump straight into the video. So earnings and what causes a stock to move so much during earnings, right? So the first thing we're going to, for example, I have the stock symbol AMZN, which is Amazon, pulled up. So as you can see, it has a little note here that says Q2. Okay. I can't highlight it all. I don't know why. There we go. So it says Q2 earnings are expected to be announced after the market on the 23rd, and it's telling you the high, mid, and low what they expect them to release. Now, when you look at this, this tells you, hey, earnings are coming out after the market, so you can go ahead and predict that the stock is going to swing one way or the other. You know, it's going to go up or it's going to go down. Sometimes they kind of stay the same. But somebody like Amazon is going to go up or it's going to go down in most cases. So why does this happen? So as you guys can already predict, it's some people out there, you know, of course you have insider traders and you have people that trade before the stock or after the stock. So it's people that's sitting back and they're wondering, oh, I don't know how Amazon is doing. Is Amazon doing good or bad? And they wait till corporate earnings. You know, that is pretty much the health of a company is its financial report. The financial report is going to tell you how they did the past quarter. You can compare this quarter to last year's quarter to last quarter, and also it has projections for the next quarter. They tell you what they're going to do, so it can tell you if the company is really growing, how it's doing, and stuff like that, if it's going to be around. And that's what makes people decide that they want to jump into this company. So when people find out good news, the market's controlled by emotions. They find out good news, hey, it beat my expectation. It beat expectation on revenue. It beat this, whatever. They start trading up because they think it's going to do good or whatever, right? They start buying it. And the more one person buy it, for a prime example, for $4.89, another person buy it for $4.90, another person buy it for $4.91, and that's how the stock moves. So now you can ask yourself the question of, hey, how do I know when an earnings report is coming out? It's so many other ways, but you can go to this great tool called Google. You go to Google and you type in the word corporate. Let's go type in earnings report, right? Go to earnings report, and you can see I've been to these before. Or you can click on earnings calendar, and you have something like this that'll tell you on the 20th. It'll tell you all the companies that are coming out with their earnings, right, for the whole this day. Then you can go to, okay, who's coming out on the 21st. And it'll tell you everybody who's on the 21st. Hey, who's coming out on the 23rd? And it'll tell you everybody who's coming out on the 23rd, right? So this gives you a step-by-step, play-by-play of earnings, right? This tells you. This is giving you a play-by-play of how earnings are going to be or whatever. So that's one way you can look at it. That's one way you can find out what company has their earnings. And it also is going to tell you over here if it's going to be after the market, before the market, or they may not know the time, depending on the companies. But this companies always release their earning reports. It's just the big ones are the ones we talk about. So bam, so now that you know this, another little tool for your tool belt is you can go to click on the word charts here, and you can set up your chart, and you can go to company events, and you can click on earnings, right? You can click on that tab called earnings. And by having this, you can see how a company performed in the past with earnings. So for example, see this little red button here? It's going to tell you Amazon reported a quarter earnings of 0.12, and you can see how the stock went up. So they'll tell you how it did. And then you can see back in February, it had a stock rise of stock earnings of 0.45 per share, and you can tell it had a jump here as well. So you can go back and see previous earnings or how they performed and stuff like that. So that's a good thing you can look at. You can look at earnings as well. And this is the reason why, the big reason why it moves is that when people see it, people they play off of earnings. They see a company doing bad, they saying, oh my God, it's emotions. People start selling it. When they see it doing good, they trade it on up. They buy more of it. They think it's a good thing, right? And that's how you have these massive swings, not in all stocks, but in some particular stocks you can see as well. that they would have those type of swings. Another thing you can keep in mind is, you can look at the beta sometimes to see how volatile that stock is as well. Pay attention to the beta as well. If you don't know what beta is, look at my other video, what is beta. So that's why you have these big swings, and this is why you have people who know that earnings are going to come out. They know it's going to be a big swing, so they buy a bunch of the stock or they sell a bunch of stock. The stock usually gets a lot of activity ahead of earnings and after earnings. Ahead of earnings and after earnings. Like Amazon, the day before, a lot of people will start trading it up. And the day after, if it reports good earnings, because you had this thing called aftermarket. So when the market closed, when the market closes after hours, not after hours, but it closed about 1600, but 4 o'clock on the East Coast, or 1600 for the military type. When it closed, they trade for another 4 hours, and a lot of times people trade the stock up. So you can look at the stock in the after hours, how it's trading, and then before hours they trade as well. Then by the time the bell rings, by the time the market is open, you can tell the stock probably already moved $10 in the after hours stock and before hours. So that's another reason why you see big jumps in a stock before, because you can trade a stock after hours and before hours as well. And when earnings reports come out, a lot of people do that, anticipating corporate earnings. So hopefully, and let me show you here. I have the access on my etrade here, and you see how it says extended hours. You can tell that the stock in the extended hours went up $6.12 is what Amazon did after hours. I mean, in the extended hours, before hours or whatever, right? So these are ways you can look, and because you can trade after hours, that's why you have these big jumps. So hopefully that explains a lot to you guys. Hope you learned something from that. Don't forget to like, subscribe, comment, share, all the other good stuff. Until the next video, you guys know what to do. Be safe.